candlestick formations and confluence.
Perfect. And what did you feel like? What did you feel like was one of the things you wanted to work on for the week, in terms of what we spoke about that week, and what you felt like you wanted to kind of like go back and review because you really didn't get it.
Um, Let me see. Maybe where to start with supply and demand exactly. Like I could get the general price area, but because I base it off the line chart, but I also try to see like how the wicks played out, and I tried doing that. So I did like a double. I'm not sure if you can see it in my homework. Like you'll see the supply zone in pink, and then like you'll see a darker pink right over it.
Okay.
You see what I'm saying?
Mm-hmm. So
Yeah.
on those zones there, are you just so that we're on the same page? Remember, when we're identifying supply and demand, right? If there's a resistance level that we're focused on, then once we've identified the high that kind of set the tone for that resistance, then all we're doing is looking for the last previous high before that, or what was the previous resistance, right? We understood
Right.
that. We understood that in the sense that you know each high of each candle kind of represents resistance, but we're looking for those pivot points, right? Points where the market hit that point and then it retraced. So, for instance, if we were focusing on, let's say, this high here, once we've identified the high there, all we had to do was identify the previous high, and we would be able to draw a zone between those two highs and kind of extend it to the left and right. Um,
Okay, I see.
for this zone here, had we went with this low, right? Maybe we would have just asked ourselves, is this low? To my daughter, like here's some. Is this low and the previous low? Is that the area I want to identify my zone? Then that may be the price area you would look for identifying as your supply or demand zone, depending on which side of the market you're on, right? But overall, I mean, your homeworks have been looking sharp. Um, I'm ready.
I
Say what?
No, sorry.
No, I was just saying that your homework has been improving since throughout the duration of the program. I can see here, I can see clearly what you're seeing and what you're trying to identify here, and everything's looking good, man. I mean, how are you feeling overall?
Feeling better. Today I updated the inverter head and shoulder, try to like align it properly, and I applied Elliott waves for the first time, so I'm still adjusting it based on resistance and support.
And how did that?
See, well, it took all day to like really see where I went wrong, where I went right. So overall, like it was like a 70% success rate. Only I just have to like really look left. That's all.
That's really what it's about. Let's say for instance that I'm focused on the setup of a trade or the market. Yeah, we're looking for consistent identification of that, but like at the same time, I'm not stressing out for the market to go 100% the way I predicted, because I understand there's different things moving. What I'm looking for is that if that was the setup I took, that I entered at a good area where I was not in drawdown, right? So let's say I was entering for a buy here, right? My goal is to always enter after the close of the hammer, right, or the closure of the engulfing candle. And if this was my entry here, and my target was up here, then that I hit that target clean. That's my goal. So, in the end, man, just keep tracking. That's honestly how you get better, like predicting and tracking. This is what I predict what's happening. Use your publish tool on the TradingView site. Any analysis you do, publish it during the day. on the time frame. You want to see how it progresses and go back and view the publishing of that. And it really helps with the confidence of your analysis. It helps you get a good idea if you're on the right page or not. Or even if, let's say, you took that trade and you got knocked out, or you took profit early, you can always go back and look at it and say, man, look, this is where I got psyched out, or this is where I thought the market was done, and look how it continued going up or down. What was it that I missed here? So we'll also talk about tomorrow, before we talk about Elliott waves. We'll talk about actually I'm gonna go through the whole week, and then on Thursday we'll talk about actually writing down what we're doing every day. So like having a checklist in a sense to what we're looking for in a day. So if I planned out a trade, what the trade is, what my target is, what news events, when we talk about news events and all that, we're going to talk about everything like that we will need, so that on Thursday, when we talk about planning our trade, for instance, I'll show you guys a copy of what I fill out every day. Where is it at? This is my trade checklist, and every day when I am trading, I am filling it out. I'll send you guys a picture of one that I filled out most recently. So I'm looking at the news event, what time it is, the impact, right? When we talk about the news events, the trades for the days that I'm looking for. I'm looking at what the daily high is, what the daily low is, the previous session's high and low when we talk about that, right? My plan for the day, what is my currency pair, and what are my signs of confluence for that? The scenarios for the day, what levels I want to see the market hit. And then I just go back and write what actually happened, so that I understand day in and day out what I was looking for. If I won, I won. If I lost, where did I go wrong? And every day is a learning progress. So we'll talk a lot about this, how we do it. It's an honesty point. So where you're being honest with yourself. Did you do well? Did you do poor? Why do you think you did poor? The amount of trades I took for the day, the largest winner, the largest loss I took, and what the total profit and loss was. So we'll talk about this more in depth. Let me see. Bianca, how you feeling?
I'm okay.
What
Sorry for getting up so late.
No, don't be. How did you feel last week in terms of everything we went over? What was your biggest takeaway?
Everything was okay. That very last lesson that we learned, that one was the hardest. The candlestick patterns, only because
There's so many.
When I thought I was seeing them, excuse me?
No, it's usually the hardest because there's so many of them.
When I thought I was, when you were talking to my mom, to see them before, she would say something so I can check it out, but I was wrong. So I just have to study the candlestick patterns. But other than that, I'm doing out the reason that
You're breaking.
Get my last.
You're breaking in and out again. Say that last part again. Hello? If you don't mind typing it out, because you were going in and out. Let's see if we get her back. How about you, Brad? How's everything? You don't mind writing down what was your biggest takeaway for Jesus Christ, 30 inches. Why don't you type what was your biggest takeaway of the week? So like that, let's see, I would love to know what your biggest takeaway is and what you felt like you would love to work on, or have an idea of, what you felt was the most challenging for you. Let's see, Brandon. What's up, Brandon?
What's going on, JL? How's everything?
Doing well, man.
Awesome.
What would you say was your biggest takeaway for the week?
I actually wasn't able to get on last week. I had a really busy week, but I mean, I've been watching all of the videos,
Mm-hmm.
always reviewing everything. Definitely have to work on my Elliott waves. I think that's my main focus for this week is to review all of the Elliott waves and get a little bit more familiar with that.
Mm-hmm. Yeah, we're gonna talk about that more in depth tomorrow, along with the fib levels. We'll talk about both of them tomorrow. So just try to tune in for tomorrow's class. But as always, man, if anything, we're here for you. Just
Of
let me
course.
help you out with, bro. Let's see. I see Dean. Who else we got here? What's up, Jacqueline?
How are you?
How are you doing today? I'm doing well. I'm not hearing you well. Say it again.
Hello.
Yeah, I hear you better now.
Okay. Let me know when I go out because I can. My biggest takeaway was sometimes you don't know what you don't know. And on Saturday, when we were going over my chart and you were asking me to look at the candlestick pattern, it was like, oh my goodness, supply, demand, support, resistance. I needed to make sure I know those first. So I'm looking to where you're telling me. My biggest takeaway of okay, I need more practice. I need to learn my candles a little more because they make a huge difference, as well as the patterns. I didn't realize how much the patterns has an effect on, the market direction.
Yeah, I mean, I kind of heard what you said, but I understood the important part of it. What I want you to focus on is that we're building a system of confluence. Like we're looking for multiple reasons to confirm what we're looking at. So although the candlestick patterns and the candlestick formations or the zones or the trends or the market structure, everything we learn, right? Although they will signal it, we're looking for areas of confluence where we have multiple confirmations backing that up. So we're not entering a trade and then trying to figure out if we're on the right trade. We're entering the trade because we know she's going down or we know it's going up. Now, as a trader, there's going to be times where the market was set up to go down and it went up. And that's where we understand where to get in, where to get out, and where to avoid, further losses or whatnot. So, in terms of the candlestick patterns, they are very important because they are signaling to you when the buyers and sellers are taking control, right? If the buyers are continuing to take control or maintain control, right? We know what candlestick patterns are showing us because at the end, each candle is developed based off of if there are more buyers or sellers in the market. So the more people buy, the more price will go up. The more people sell, the more price will go down. In that sense, But overall, they are very important, especially when you focus on specific ones in specific areas, which we will talk about in a little bit today. But I just want to make sure that you're growing, you're gaining confidence, and every day we're looking for that growth in understanding, identifying, and applying that information.
Okay, thank you.
No problem. Let's see. Dean said the biggest takeaways was the candlestick patterns. Perfect. Brad said, I need to be more methodological. Yes, 100%. A lot of chart work. We need everyone doing chart work here. Let's see. Furman, what's up, bro?
Hey, what's going on, man? How's everybody doing?
Everybody's good on my end. How about you?
Good here, man. Just battling internet issues here and there and light issues. But besides that, man, everything's going good. My biggest takeaway for the week, because I actually couldn't make it to one of the classes, but I watched the video and I tried to do the homework the best of my knowledge. But one thing that I needed maybe a little more work or to review would be the triangles or the wedges, like the rising wedges or the dropping wedges. I think that's one thing that sometimes I get mistaken because there's almost 3 different kinds of wedges or triangles. So sometimes I get a little confused about how is it forming or just that really.
Mm-hmm. So with that being your biggest takeaway, that would be for you. Wait, what? Is there a way to share a privately published chart on TradingView? No, because if it's not private, if it's not public, when you publish it, no one can really see it but you.
What I take away from it?
Yeah. No, you say your biggest takeaway was understanding that you need to focus on that. But what you felt like throughout the week you understood best?
Biggest takeaway, what I understood was that to piggyback what David said, and I think it was Jeanette, the previous girl, was noticing that confluence is a big important thing of not just because I see or I think that I see a candle forming that right away that the market's gonna go the way that I think is gonna go, instead of me analyzing and waiting to see what else is forming or what else the charts are trying to tell me, so I could be able to get in and get out.
100%. For instance, to back up what you're saying, let's look at this chart I have up, Euro NZD. So we can see here that although we had a move to the upside here, right? We can see here that the market consolidated right around this support area where the market was consolidating prior to that. So we can see that when the market broke back in here, it was unable to maintain price below, or every time the market hit our demand zone here, like we spoke about, the market eventually created, right, a bullish engulfing candle to break the supply or resistance area of that consolidation. So once the market broke above that, we can see here that the next 3 candles followed up to be bullish candles. And then the market, when it reached the resistance, although the candle here formed a tweezer top, we can see that the market actually came back and engulfed the previous candle, and the market kept going up. We can see that after that, it found resistance, tweezer top, the next candle, a bearish engulfing candle, confirming a 3 inside down pattern, and then the market started to go down. After that, what do we have here? We have a inverted hammer. Prior to that, we had a bearish candle, and then after that, we had a bullish engulfing candle, giving us a 3 inside up, or we can say, a morning star pattern in a sense. And then the next candle closed as a doji, and then the next candle engulfed it. And we can see that the bullish pressure to the upside kept going up because all the market kept doing was closing in bullish candles. So here, we had multiple confirmations at the market, the breakout, the retest, right? We had the candlestick pattern, and then after the market reached the resistance or the supply area of this market here, the market actually broke out with another bullish engulfing candle. So we had 3 confirmations pointing to the market going up. All I had to do was look left to have an understanding where exactly the market could have reached. So we see here that this was the previous high. So once the market broke above this zone here, we knew that the next zone that we had drawn out here was the price we wanted to focus on, and we could have rolled that trade to the upside. Now, confluence is something I want you guys to always focus on, because the more confirmations you can find to back up your idea, the more stress-free that trade can be. For instance, we're not just going to be like, oh, look at an inverted head and shoulders here, right? Let me take that trade. And then we get caught up on all this choppy movement. And when the market made that fake move to the downside here, that we decided to close it, and then the market made its move to the upside. All right, you just want to confirm it. Always wait for the confirmation, right? And seek for what we're looking for. Identify what your strengths are and go with it. Is it that we're seeing, you know, a bullish falling wedge here, right? The market was rising. It came, started forming lower lows and lower highs. The market engulfed out of that wedge, shot up. We also had an inverted head and shoulders here, right? And then when the market broke above that, as you can see here, the head faked out of the zone. Maybe the important zone was the one down here. You know, this is where we're getting an understanding. As you can see, if these were my two zones that I was identifying above here, right? If I would have found my median zone, I would have been able to see where a lot of the consolidation occurred. And I was able to understand after the structure of the market set up on that support area, we had a lot of consolidation around here, which became an accumulation area, right? After the market dropped down. So once we understood that, you can see here, the market dropped down, came back up, started consolidating a lot. So overall, the movement to the upside was backed up. Let's see, someone wrote something. Talk to me, David.
Oh yeah, I was gonna ask you. Remember about the light pink shade and the darker pink shade?
Mhm.
So what I was drawing was the supply zone, and then right in there, the darker pink shade would be the distribution. That's what I think I just noticed. That's what it is that I'm looking at without knowing it.
Yeah, so you always want to identify, like whenever we're identifying any of those areas, if it's a distribution, is it accumulation, right? Always, as you said you looked left. That was very powerful for you to say, because you always want to understand what happened before, and so you can understand what's happening now. And then when the reaction of the market occurs, when it happens after, we back it up with those two other confirmations we had. So if my move was to wait to see what happens after and then take the trade, then now I have full confirmation of what the market's going to do. Does that make sense?
Yeah, I think my question was more like, so whenever I see a supply or demand zone, I can expect to see a consolidation. It can either be accumulation or distribution, depending on what side of the market, what the market is doing at that moment, right?
Yes, because if there is consolidation at those zones, right? If, for instance, there was consolidation here, right?
That's accumulation then.
That's accumulation. Then when the market consolidated up here, that's distribution. So there is times where the market, for instance, like here, right at this resistance, after it broke, it looks like a distribution, right? But you can see how here the market simply was just consolidating right above here after breaking out. It made a slight move to the upside and then came down. That's where we can identify the structure of what's happening here, because all the market did was just come back to retest the price it broke out of. You get what I mean? So just make sure you're confirming when you see consolidation, right? You're not just like labeling it as a distribution or accumulation and assuming that the market's going to go up or down. Just, confirm it once the market breaks that level. They do say that, you know, taking a trade up here at a distribution area, you know, it's a bit more aggressive than actually waiting for the breakout to occur and then on the retest to take that trade. But in the end, if I have confirmation up here that the market's not going to go any higher, you know, for instance, we had a hangman pattern, 2 hangman patterns, and then the market came and engulfed that candle. You know, me personally, I took this trade on the engulfing of this candle, and then the market came back and tapped right around where my entry was a few times before she actually made the move to the downside. So I took this trade for a sell from here, and the market is currently right here, which adds up to about 87 pips so far. So, you know, I want you guys not only just focusing on the setup, we're focusing on Confluence as we continue learning more and more in regards to what the curriculum is. You know, aside from that, my goal is to teach you guys how to identify those areas with these tools that I'm providing you. So when we're looking at potential areas for a trade or whatnot, like we understand when this happens, what we're looking for. When that happens, what we're looking for. If the market did this while I was looking for this, how to make the adjustment. Those are the transitions of the education throughout this program. Let me see here. I want to make sure. So just to review everything we spoke about, so we don't spend more time here. I'm gonna pull up the whiteboard and let's review everything we have spoken about to date. So we spoke about the intro to Forex, right? We spoke about pips, and we spoke about lot sizes. So let's see, Jacqueline, a standard lot would represent how many units of currency?
Uh-oh. The standard is the $10, right?
Standard, no, the
Or
unit,
the dollar.
that's the dollar figure amount of the lot size, but how many units of currency does that represent?
100,000?
Correct,
1,000? Oh, okay.
100,000. So, Dean, I know you're, let's see, what would, on a currency pair that does not end in JPY, how many numbers after the decimal point are we looking for?
Did you want me to answer that, Jose?
Yep,
4.
4, right? And what is the last number after the 4th decimal point considered?
A pipette or a fractional pip?
Correct. And let's see, so on top of that, we spoke about the different types of orders there are. So we had a buy limit, sell limit, buy stop, sell stop, right? We had market execution. So on a buy limit, Jose Furman, what are we looking, when will we place a buy limit?
On the buy limit, we would place the market to go up and then down. No, to go down on the sell. So when it crosses up, it activates, and then it goes up.
Correct. So we would place a buy limit below the current market price.
Below the current market price.
Correct. And on a sell limit, we would place it above the current market.
Above.
Correct.
Yes, sir.
On top of that, we spoke about take profits and stop losses, right? So we spoke about trends and channels. So let me see, Jeff, on a trend, how many touches confirm the start of a trend?
3.
Correct. And on the 4th touch, what are we identifying there?
Identifying which way the trend is going.
Correct. If the trend is going to be broken or if the trend is going to continue going up. Correct. Randy, when we
Y empezamos a hablar de ahí a ahí. Bueno,
What's up?
sacan ese.
when we start
Ok.
when we
Y por casualidad,
how
Marina,
many
nosotros
touches
no
are
digamos
there?
Excuse me, can you say that again?
How many touches confirms the start of a trend?
3.
Three touches confirms the trend, but the start is 2 touches. Remember,
Always. Two starts it, 3 confirms it, and then 4th determines the trend.
correct.
There you
So-
go. My bad.
While I got you here, what's the difference between support and resistance and supply and demand?
So support and resistance is where, well, from the zones it's the top, and the demand is the bottom. No, the support is with the demand, and the resistance is with supply.
Correct. And the difference between them is what we're focusing on.
Would it be the touches?
No, not the touches. On support and
touches.
resistance, we're
The
focusing
price action?
one price, right?
One price, sorry. One price.
On supply and
And the
demand.
demand and supply is the area of prices.
Correct.
Okay, got you.
Mr. and Mrs. Daniels, when there's a breakout, the market is confirmed with what?
A retest?
Correct. And when the market fails to retest the breakout level and it breaks back in, that will be considered a what?
I have a brain fart. Could you repeat the question?
So if the market broke up and it failed to retest the price that it broke out of and it broke back in, that would be considered a what?
A fake out?
After it retests that level under, right?
Yes.
Correct. So when I'm looking for a candle that signals that buyers took control, Kurt, what are the name of those candles that signal that a buyer took control?
Engulfing candle.
No, not the pattern, the name of them.
Sorry, could you repeat the question? I was just checking a message. Sorry, man.
No worries. When we're looking for a candle or candles that signal the buyer took control, what are the name of them?
The candle.
The actual candle name, not the pattern, the candle name. So remember the 4 different types of candles? We had a Morobuzu
Oh, yep.
and a long body candle. So a bullish Morobuzu signals that buyers took control, and a long body signals that the buyers took control as long as it's a bullish candle, right?
Yep.
Correct. And then while I have you here, what candle signals indecision that open and closes on the same price?
Doji.
Correct. And dojis, when a doji is formed, Jeffrey, you there? When a doji
Yes, I am.
when a doji closes in resistance, right? And the first candle was the same as the previous uptrend, and the next candle engulfs the doji candlestick and the first uptrend, what kind of candlestick pattern will we have there?
Maybe
So think about it. And I'll
is that the evening star? Something like that, shooting star.
evening star.
Evening.
So the first candle was a bullish candle, same as the previous trend. The next candle was a doji, and the next candle after that was a bearish engulfing candle, right? That is a evening star pattern when it happens at resistance, right?
Yeah.
Jacqueline, when you have a candle at support that closed at the same price that the next candle opened up at, and they both had lower wicks, what would be the name of that candlestick pattern?
Tweezer tops?
Tweezer bottom. Remember, support's at the bottom.
Oh, okay, tweezer bottom.
And while I got you here, When a candlestick formation forms at support that looks like a W, that would be considered a what?
Double bottom.
Correct. So, Bianca, when I have a candlestick pattern that the first candle is smaller than the second candle at resistance, what's the name of that candlestick pattern? A bearish engulfing candle. I want you to be a little bit specific, but correct. And whenever I see the bearish engulfing candle, and then the next candle engulfs that candle with a bullish candle, what would that be considered? Correct. Correct. Angel, what's up, bro? You there with us?
Sorry, I was looking for the way to unmute myself.
No, you're good, brother. So whenever I have a candlestick formation that the first candle, the first shoulder of the candle was inside the zone, and so was the second candle. I mean, the second touch, the head of that head and shoulders will be considered a what?
The head of the head and shoulders.
So we're talking structure here, right?
Yeah.
Hold on 1 second. I don't know why this screen has been popping up.
Would that be a bearish reversal? I'm confused.
No, so if I have a shoulder inside the channel and the head occurred, that is a head and shoulders pattern.
Yeah.
The head is always considered a what? Someone helped you out there. It's a fake out.
Oh, I didn't think it was that simple. Sorry.
No, you're good. You're good. I'm trying to confuse you guys to make you think. Okay, so let's think of it like this. In the way that I'm teaching you now, Angel, when I identify supply and demand, my goal is to also identify the what?
The I'm drawing a blank. Sorry.
Whenever we identify supply and demand, we always want to identify the zone that's in between supply and demand as well.
The median.
The median zone, correct. So let's see, David, where you at?
Here, sorry, I was just looking at my chart for a second.
You good. So whenever I have consolidation at support, right? Right before the market takes out, we should always expect a what?
What, a breakout? Is that what you're saying?
Right before the breakout in that
that's accumulation?
In accumulation, there's always going to be that fake out to the bottom before she makes her move to the upside.
Right.
So for instance, if you look at the chart over here, we can see that around this accumulation area, right before she made her move to the upside, the market consolidated, faked out of the zone, came back in, retested, and then made its move to the upside. Okay? Let's see. Evelio, what's up, my brother? When we identify an uptrend, when we're looking for the uptrend to change to a downtrend, at what touch of that uptrend are we looking for the market to retest? Which one? Correct. And if the market stays above that price where we identified the support of that third touch, we can always expect the market to do what? Correct. So just so you guys all understand, when we were talking about market structure, right? Whenever we're looking for an uptrend and we identified the touches to that trend, right? If I identified this as my support area, right? I'm looking for when the market breaks it and fails to retest and it stays above, we can expect the market to move up. And the first price that we will always focus on is the last lowest high point or the highest high point of that trend. So if the market is going up, we can expect it to move anywhere to that price there. Does anybody have any questions in regards to what we reviewed? If you don't, type if you don't, type 1. If you do, type 0.
Hey Jose, I have a question.
Talk to me.
The mid zone, could you go over that again?
Of course. Randy, type out your question while I answer Dean's question here. So when we're identifying supply and demand, right? So for instance, we have supply and we have demand, right? I want to identify the zone in between where the market kind of has that breakout to the upside, and it's usually going to retest that price before making its move to the upside further to the supply zone. So on a live chart, when we look at that, if I'm looking for my supply or demand area, right? If this is supply and this is demand, then my job is to identify the zone in between where I can see where the market visited that path a few times before going down or up all the way. So hold on a second. So as we can see here, when the market made its move up, we can see that when the market reached that price, it came back down, tested it, and there was a lot of traction in between those two zones there. Another example of that would be if this was my demand zone and this was my supply zone. I'm looking for the zone in between. That shows me where the market had the midpoint in between the demand and the supply zone. Does that make sense?
Yeah, that makes sense. Thank you.
You got it. Let's see, Randy, what was your question?
So I said that is just like you said, a head and shoulders will be considered a fake out. The inverted breakout, the inverted head and shoulders will be considered a breakout.
No, the inverted head and shoulders is the same setup. It just happens upside down.
Oh, okay.
What I was saying is that the head of the inverted head and shoulders or the head and shoulders is the fake out of the channel. So for instance, here we have an inverted head and shoulders on a descending channel. We can see that the market shoulder was inside the zone. It had out, it broke back in, creating the next shoulder, and then the market's reaction was that it shot up. Does that make sense?
Yes. Thank you.
Perfect. Let's see here. What are the parameters for the candlestick pattern? It involved 3 candles, usually happens at resistance. It was one of the last patterns we learned. The 3 inside up and the 3 inside down you're talking about? Okay, so the difference between a 3 inside up candlestick, where's it at? So a 3 inside up and 3 inside down, the difference between that and a morning star and evening star pattern is that the morning star pattern and evening star, the second candle is either a spinning top or a doji. On the 3 inside up or down, it's either a short body, it could be a long body, it could be more wuzu. Just the third candle has to engulf the previous candle. Does that make sense? Perfect. Let's talk about the wedges, right? So we spoke about wedges and how wedges are identified, right? They can be similar to a channel, just the difference between a wedge, right? When we're looking at the market making a move to the upside, right? We're looking for basically the market to create higher lows and lower highs, but to the point where, you know, on a channel, the actual candlesticks are parallel to each other, right? The support and resistance. On a wedge, in this case, they're just like kind of at a slighter slope. So here in this case, if the market was, hold on one second, forming a wedge, it would look something like this, and the reaction to the market would be a downward push to the downside. So when we talk about Elliott waves, right? We spoke about we'll actually speak about the move to the upside, right? And the number of that, we can see that after the market made its move to the upside, if it's a correction, when we talk about that, sometimes it can be a correction where there's a slight consolidation sideways, right? It can be a slight consolidation downwards, right? Or a slight consolidations to the upside. And when we learn about that, we can see the difference between them and identify patterns and formations within them. What I want to focus on is today, I want to teach you guys in regards to on key levels where these candlestick patterns occur. Now, before we get into that, I'm going to give you guys the opportunity to showcase your screen. I'm going to pick 5 people. And the 5 of you guys are going to share your screen real quick, and you're going to identify 3 of the following patterns, okay? I'm gonna pick, let's see, I'm gonna pick Angel, I'm gonna pick Randy, Jeff, and David, and Jacqueline. I'll pick the 5 of you guys. Okay, we'll start off with David. Go ahead and share your screen. And we're going to identify the following candlestick patterns.
How do I do that?
There's a green box at the bottom that says share with a green arrow pointing up.
All right.